Our checks in the stores early in the year showed that Under Armour had lost significant space in Dick's. This year, we estimate it could be down 20 to 30%, and based on the results for Dick's this quarter, I think Under Armour sales were probably down about 30% in their stores. This all stemmed from the fact that Under Armour went into Kohl's last year, which really disrupted their distribution because they did not segment very well. They had the same product in Kohl's that was in Dick's, and so that also caused a heavily promotional environment, and I think that led to underperformance at Dick's and likely their decision to take out some space for them. Dick's comments on improved performance in 2019, we're skeptical on that. Under Armour's been talking about improved product for some time now. Originally, it was supposed to be this year, then the back half of this year, and last quarter when they reported that got moved to fourth quarter, and now according to Dick's, it's going to be early 2019. So we're a bit skeptical on their ability to differentiate and drive new product across their distribution channels.
How long have you had the sell rating on, Susan? Because it's a stock that it has been ripping this year. It's up 44% so far this year. So what are you underestimating about the story? What do you think you missed?
Yeah, so I think, the stock's been up for the profit improvement. Operating margins are obviously under pressure. The thought is they could get back to 5 or 6% EBIT margin, which is almost double to where they're at now. But for me, I believe that's all priced in at this point, with the stock trading at 67 times for, if they're lucky, low single-digit top-line growth, minus 30% earnings growth. That seems very pricey. Even if they did get to a 6% EBIT margin next year, you're still looking at a 35 times forward multiple stock for little to no growth, and I just think it's going to be harder for them to get back to double-digit growth in this environment. We're going into more of a fashion cycle, whereas really over the past decade we've been in this athletic cycle, and athletic has grown high single-digit, which clearly Under Armour did benefit from, but that's really dropped down to a low single-digit growth, and I think it could drop further going forward.
What are you saying, that you're seeing people now starting to choose actual fashion rather than athleisure wear?
Correct, yeah. So we're seeing a lot of the fashion players, such as Urban Outfitters, plus 13% comp last quarter. American Eagle, who just reported this morning, plus 9% comp. Abercrombie actually doing better with positive comp. So a lot of these fashion retailers are making a comeback. Denim is back. The retro trend is driving logo wear back. So I think that's really starting to take over in this fashion cycle, and I think the consumers have stocked their closets with black yoga wear.
That sounds like a problem, though, for the entire space then. It's a problem for Lulu, it's a problem for Nike, it's a problem for Adidas as well, no?
Yeah, I think, Lulu has done a really good job adding more fashion-infused lifestyle apparel, and streetwear is popular right now, which I think they can play in that area. And same with Nike. They've always been done better at infusing fashion into their product. Under Armour, on the other hand, has always been more traditional athletic wear that started out like these other guys, as traditional workout apparel, but they haven't really been able to move into that streetwear type look, and I think that's what's making them struggle.